Welcome to today's What Moved the Market show. I'm your host Prem. It's Thursday, November 6th, 2025, and here is everything you need to know as the markets close for today. Indian markets ended the session in negative territory today, extending the consolidation phase after Tuesday's sharp decline. The Nifty 50 closed at 25,509, down 88 points or 0.34%. The Sensex shed 148 points to settle at 83,311, losing 0.18%. Meanwhile, Bank Nifty declined 273 points to close at 57,554, down 0.47%. The overall market sentiment remained cautious as investors adopted a wait-and-watch approach amid continued foreign institutional investor selling and mixed corporate earnings. Broad-based weakness persisted across sectors, with both the Nifty Mid-Cap 50 Index and Nifty Small-Cap indices declining around 1%, indicating pressure in the broader market as well. On the currency front, the Indian rupee closed at 88.61 per dollar, inching up marginally from the previous session's 88.73 levels. While the rupee showed slight strength today, it remains near its recent lows, hovering close to the 88.90 level, touched in late October, which was near a historical weak point. The currency's movement had limited impact on market sentiment today, with investors focused more on domestic earnings and FII flows. Today's session saw Asian Paints emerge as the standout performer, surging over 5% to become the top Nifty gainer. Three key factors fueled this rally: the resignation of a key executive at rival Birla Opus, MSCI increasing Asian Paints' weightage in its standard index, which is expected to bring inflows of around $95 million, and falling crude oil prices that benefit paint manufacturers. Nomura even raised its target price to 3,100 rupees from 2,285 rupees earlier. Other gainers included Reliance Industries, which climbed nearly 2%, Adani Ports gaining around 1.4%, and Mahindra advancing over 1%. On the losing side, Power Grid Corporation led the decline, falling 2.2%, followed by Eternal, which dropped 1%, and Bharti Airtel losing nearly 1%. Broader selling pressure was visible in metal, auto, and IT stocks as well. From a technical standpoint, Nifty 50 tested the critical 25,500 support zone today and managed to hold above it by a thin margin. This level, along with the 25,300 mark, forms a crucial support base going forward. Analysts note that the index closed below its 20-day exponential moving average for the first time since early October, signaling short-term weakness. On the upside, immediate resistance for Nifty is placed at 25,700 to 25,800. A sustained move above 25,700 is essential to revive bullish momentum, while failure to hold above 25,500 could invite further weakness toward 25,400. Bank Nifty continues its consolidation within the 57,300 to 58,500 range. The index held above 57,500 today, which serves as immediate support with resistance near 58,000. All sectoral indices closed in the red today, reflecting broad-based weakness. FMCG stocks showed relative strength in morning trade, but couldn't sustain gains. IT, metal, auto, power, and banking sectors all declined between 0.5% to 1%. The Nifty PSU Bank Index fell 0.5%, while the Nifty Private Bank Index declined 0.68%, indicating pressure across financial stocks. On the regulatory front, SEBI made significant announcements this week. The market regulator expanded the IPO anchor book size to 40% from 33% earlier, aiming to broaden participation of domestic institutional investors like mutual funds, insurance companies, and pension funds. The new framework, which comes into effect from November 30th, reserves 33% for mutual funds and 7% for insurers and pension funds. Additionally, SEBI is considering revising the proposed cap on brokerage fees paid by mutual funds following industry concerns. The regulator has invited public comments until November 17th on this matter. Crude oil prices showed modest strength today. In precious metals, gold is up and now above $4,000 mark, and silver too is up and around 48.3. Global market sentiment remained relatively stable today as Asian markets posted strong gains, with Hong Kong's Hang Seng up 1.82% and Japan's Nikkei rallying 1.4%. The U.S. Federal Reserve's recent rate cuts and hints at further monetary easing continue to influence global capital flows. While this has made emerging markets like India attractive, Elevated US dollar strength and concerns about global growth have kept investors cautious. There were no major geopolitical disruptions today that directly impacted Indian markets. Looking ahead to tomorrow's session, Nifty 50 needs to reclaim and hold above 25,600 to 25,700 on a sustained basis to trigger short covering and pave the way toward 25,850 to 26,000. However, if the index breaks decisively below 25,450, it could extend the decline toward 25,130 in the near term. For Bank Nifty, the consolidation phase is expected to continue within the 57,300 to 58,500 range. A breakout above 58,400 would signal renewed bullish momentum, while a breakdown below 57,500 could see the index test lower levels. Key catalysts for tomorrow include global cues, corporate earnings announcements, and FII flow data. Traders should watch for stability around support zones before initiating fresh positions. Today's key takeaway: with Nifty testing critical support at 25,500 and holding above it, this consolidation phase presents buying opportunities for medium-term investors near support zones rather than chasing prices at higher levels. Focus on quality large caps like Asian Paints, which are showing strength, and avoid over-leveraging given the current uncertainty. Use strict stop losses, especially if Nifty breaks below 25,400 on a closing basis. That's all for today's market wrap-up. If you have any questions or want specific stock insights, send them my way and I'll address them in tomorrow's show. Stay tuned for tomorrow morning's wrap, and remember, discipline and risk management are your best friends in volatile markets. Until next time, happy investing.